Recording in progress.
Good morning and welcome everyone. This is the December 6th, 2021 Long Beach Community College District Board of Trustees Audit Subcommittee meeting, the exit committee for the audit report. Our trustees and our staff are practicing social distancing. In response to the coronavirus, COVID-19, we are using video conferencing technology to hold today's meeting. Governor Gavin Newsom issued an executive order that declared a state of emergency. The executive order also updated the Brown Act regarding public meetings in response to this health crisis we are facing. Today's remote meeting meets the updated Brown Act requirements. And the technology part of this is handled by Dario. And as always, we thank you very much for that, Dario. Dario is currently showing the agenda, and I will go through that briefly and introduce the participants, and then we'll hand it over to our auditors. This is item 1.1, where we called the meeting to order at 9 a.m. This is a discussion information item. The audit committee reviews the annual audit reports prior to going to the full board later. The participants, we have our auditors, Heather McGee and Ricardo Prado. For the district, representing the district, Uduak Joe Intuk, President of the Board of Trustees, Dr. Virginia Baxter, also trustee, and they make up the board's audit subcommittee. We also have Dr. Mike Munoz, Interim Superintendent President, Marlene Drinkwine, Vice President, Business Services. I'm John Thompson, Director of Fiscal Services. Also with us, Conrado Duran, Deputy Director, Accounting and Finance. On the next page of the agenda, item 1.2, this is open session. Public comments are to be read at this point. I've received a report from Interim Board Secretary Michelle Reese that we have no public comments. So we'll move to item 1.3, the review and discussion of the LACC audit reports. In accordance with Administrative Regulation 2013, the audit subcommittee of the board will meet with the district independent auditors and other staff to review and discuss the draft copies of the district's annual audit. Audit subcommittee does not have the authority or power to act on behalf of the board. The final audit report will be taken to the regular Board of Trustees meeting on January 26, 2022 for review and acceptance. You may be aware that typically the audit reports would go to the board in December. Of course, COVID has changed a lot of things. The Chancellor's Office has extended the typical deadline for audit reports from December 31st to January 31st. And that's due to a lot of delays from the pandemic, and most notably the HERF funding requires significant additional testing. The federal compliance supplement, which the auditors use to do our audits, or to do the federal testing parts of our audits, the federal compliance supplement this year has significant additional audit steps relating to the HERF funding, which requires significant more hours of testing on the part of the auditors and, of course, the district staff as well. So with that, we're ready to go over the audit reports. I'll hand it off to our independent auditors, which is Clifford Larson Allen and specifically Heather McGee and Ricky Prado.
Very good. Thank you, John. And thanks for that introduction, because I was going to revisit all that information about deadlines and you beat me to it. So thank you for that precursor. So just making sure everybody can see the screen that I'm sharing, or making sure I'm sharing the correct screen.
Yeah,
Otherwise you might, okay.
We see the letter to the Board of Trustees.
Perfect. Otherwise, you might just see my background and pictures. So again, thank you so much for having us out here today to review your audit report. Yes, typically we come out and we have a little bit more near to complete reports to share with you. And the timing of the compliance supplement, although better than last year. So as you might remember, last year, we came to the Board of trustee meeting with a draft report. So, and still waiting for the compliance supplement to be finalized. So it was finalized earlier this year, but not as early as most years. So we just need a little bit more time. So the plan is to be able to deliver a final report to your January meeting. So we met with the audit committee prior to starting the audit to talk about timing and the deliverables that will be presenting to you at the end of the audit. And one of those deliverables is the governance letter. So I'm going to pass it over to Ricky to talk about this letter with you.
Hello, everyone. My name is Ricky Pardo. I am the audit senior on the engagement. So here is the governance letter, which our professional standards require us to communicate certain items to governance. As discussed at the beginning of the audit process, one of the key deliverables discussed was the governance letter, which is a separate letter, a separate deliverable. So the letter does communicate certain key items, such as significant estimates. As we can see, some of them, some of these key estimates include pension and OPEB. As well as other items on here, such as accruals for state apportionments and self-insurance claims and so forth. Alrighty, page. Okay, so there were no disagreements with management noted during the audit. Let's see, and then the letter will be dated today's date, along with the final deliverables. Okay. There were no corrected misstatements. And as far as uncorrected misstatements, there was one that was noted during the audit, which Heather will touch base on.
Yeah, so this year there was a refunding that was done. And I really have to admit, this has been the most complicated refunding that I've seen with my community college clients. And that's just the nature of having 3 bond programs and doing your best to save the taxpayers money. Took us some time to get through what was defeased, what was refunded, and setting up the new payment schedules for those debts. So when we sent this letter out for the audit committee, we still are in the process of reviewing work papers. And I have to admit that we have an uncorrected misstatement, which is not a reflection of the funds in the district. It has to do with the GASB 3435 journal entries. So when we give you a revised letter, there will be an additional reflection that there is an uncorrected misstatement, but it's only like $1.4 million. And what it has to do is with the new series, the refunding series I, there was a payment made in May. And when we set up the repayment schedules, we mapped it out for payments in August. So again, I just wanted to emphasize that it was not a reflection on any of the journal entries that the management had booked in any of the funds, that it has to do with the conversion entry. And when we have a change or an amount in that threshold, we do go through our professional standards and apply what's referred to as materiality. This is well below that materiality threshold. And what materiality is something that will change the financial statement readers' opinions on the organization. So just vetting that through, definitely this is something that will not change the financial statement reader's opinion. It's just a timing difference, and we'll be caught up next year in the next year financials. So again, it was, I believe the exact amount was $1,375,000. So our apologies in not having that in this original letter, but we were going through still doing all our double checking and reviewing of the work papers since this letter had been issued.
So Heather, that would affect our long-term debt as of the end of this past fiscal year. And then like you say, that'll get caught up, and for next year and going forward, we'll be in line. Yes. Yes. It's just a timing difference for 1 year. Okay. And again, it's not a large enough dollar amount to go through. You know, John's gone through and meticulously have written the management discussion analysis. So we would have to go through the management discussion analysis, update that work paper. You know, it just kind of flows through the entire report that I think it's best just to leave it as an uncorrected misstatement at this time. Okay, thank you. Any other questions about the governance letter before we go on and look at the audit report together? Okay. So district audit report. So this is the main audit, the main deliverable, right? It's over 100 pages, has a lot of information in it, but we're going to give you the highlights today. We won't go. When we come to the Board of Trustee meeting, we'll give more high level, but consistent within the past, we've gone through the audit report in a little bit more detail with the audit committee. So the first page I want to point out to you is that independent auditor's report. So this is a primary reason why an audit is performed, is so that somebody not associated with the organization can look at the financial statements and give the outside reader a level of assurance on the financials. The opinion that everyone is looking for in their audit reports, everybody's hopeful that they receive, in which you have received, is a clean opinion. Also referred to as a unmodified opinion, but those aren't the language or the verbiage that's used in your audit report. What you're looking for when you're reading the audit report is the key language of presented fairly in material respects. There's also an emphasis of matter in your audit letter this year, and that has to do with a new governmental accounting change. So this year, the district implemented GASB 84, which has to do with your fiduciary activities. Your fiduciary activities prior to 2021 consisted of your associated students, your student rep fee, and your OPEB trust fund. So what's happened now with GASB 84 is we met with management and went through the checklist. And that checklist, the key elements that kind of shifted those funds over into not being in their own financial statements is the district has access to the books, actually administers the books for them, for those funds, and as well as the employees of the fund. You're always going to have advisors on associated student funds, and those are district employees. So those were the key elements in that decision factor. And the end result is you used to have a financial statement specifically for those two funds. Now they're combined with your business type activity, also referred to as BTA. So you just have two new additional funds in that column now. And when we look at those financial statements together, we'll point out that change. Following the letter is the management discussion and analysis, and I'll pass it back to Ricky.
Alrighty, thanks, Heather. So the management discussion and analysis, the MD&A, is unaudited, and it is written and provided by management. However, we do review the MD&A and verify that it is consistent with the financial statements. As you can see on the MD&A itself, we have several different charts talk about the FTEs and you know the activity on the balance sheet and income statement during the year. Are there any questions on the MD&A?
I just want to add something to the MD&A, Ricky, that I think this is a great section for management to really talk about the changes that have occurred throughout the year. The financial statements are great for giving you a snapshot as of June 30th, the fiscal health of the organization, but to be able to go into more depth and talk about what's different this year versus last year, which we know there's a lot of differences, right? And John's done a great job of addressing all of those differences, talking about the CARES Act funding, the student-centered funding formula, as well as the economic outlook, which is at the end of the MD&A, which talks about looking forward into the future. So this is just a great section to kind of brag about all the great things that the district is doing. So following the MD&A is our series of financial statements. So there are technically, we talked about business type activities. So there's 3 statements for the business type activities. Basically what those BTA, what that includes is all your governmental funds. And as we talked about with GASB 84, you have 2 new additional funds that are included in this statement now. If you were to look at last year's financials and compare to this year, the presentation for the asset section is pretty standard. It's no significant changes. However, if you were to look at certain amounts, you'll see there's a big difference in accounts receivable. And that really has to do with the timing of the HERF funding and when those drawdowns were requested, as well as your capital assets. You have a bond program and you are continuing to build buildings and make additions and improvements. So that's reflective in your net assets increasing. When we look at the liability section, the only, again, pretty similar, but if you were to do a comparison side by side, you'll see that there's a trans or a tax revenue anticipation note that's been added to this statement. Also, you'll notice that the current and the long-term debt liabilities are increasing. And a lot of that is reflective of the pension liabilities and the OPEB liabilities, as long as the general obligation bonds. But we'll look at those footnotes together in a minute. And as I had mentioned, really your only fiduciary fund that you still have is your OPEB trust. So your OPEB trust does have its own financial statement. So basically you have your balance sheet and you have your income statement. This footnote or this area in your financial statements is also supplemented with a footnote disclosure that gives more in-depth information discussing the actuarial information that goes into coming up with this liability, as well as the contributions that are being made to keep up with that liability. And then we have the start of the—
Can I ask a question on OPEB fund?
Oh yeah, certainly.
Is there a time period of how long that's supposed to go for? Or is it until all the health benefits are paid out? Or
yeah, and I'll start off a response to that, and then I'm sure John's going to want to add to that conversation. So a little bit of background information into OPEB. Before all the STRS and PERS liabilities were reflected, there was a 20-year plan to fully accumulate that liability. But when STRS and PERS pension liability were reflected on your financials, and I'm going to guess, but I think it's been about 6 or 7 years, that was changed and the full liability was recognized. There is no requirement of how those would be funded. The district has set aside money in an irrevocable trust. I do work with some districts that have funded the liability and actually have an asset on their financial statements. But John, is there anything you'd like to add to the district's plans for the OPEB liability?
Yeah, there's not a specific timeline. We as you can see in the irrevocable trust is over 10 million. And we also transfer each year into our retiree health fund, which has a fund balance of over 20 million. That's not, technically it's not in an irrevocable trust, so it's not, doesn't technically go against the OPEB liability, but it is contributions and held there designated for that purpose. And yeah, so Heather's showing the footnote. So our liability at the end of the year is 45 million based on the actuarial study, and the 10.9 million is in the irrevocable trust. So that leaves 34 million that's still kind of the uncovered liability, similar to the pensions, PERS and STIRS, where we have over 100 million is our share of the statewide unfunded liability for that. But we continue to do the transfers into the retiree health fund, and we make about 70,000 a year. We contribute into the well, you can see in that middle column, the contribution last year was 55,000. And the rest of the increase from 9.1 million to 10.9 is earnings from this past year. So the combination of contributions and earnings increase that irrevocable trust. So we continue to make steps towards funding that liability, but there isn't, I guess, a specific timeline that we have.
So just looking at this page here, so I was trying to track and then jump this page 58. We went from a balance of 45 million or 45.6 million to 34.6 million. Is that
right?
Or?
That's the 45 is the gross liability for the OPEB. And then we subtract the 10.9 is what's in our irrevocable trust set aside specifically for OPEB expenses, retiree expenses, health expenses. And that leaves the net liability is the 34.6.
And our expenses we have is that's the 4.8 million or so plus the benefit payment, the two negatives.
I think it's this column. It's this amount here. The 2.6 million is the payments made to retirees, right, John?
In the last year.
Right.
Yeah, that's the current payments for retiree health benefits.
I think the activity in this column, it has to do more with the actuarial study, and they're looking at how is it investments, what are the payments being made, and then just keeping plugging in all that information with as far as expected lives of employees and everything that the actuary study takes into consideration. So that's what's affecting the OPEB liability, all of those expected changes and then changes in the market, where the column B really is a reflection of what's in your irrevocable trust. So that's netted against your total liability. So if you didn't have your irrevocable trust, you would have a liability of $45.6 million. So since money has been set aside, you have 10.9 that's reserved specifically for that purpose, can't be used for anything else. Therefore, the liability is 34.6 in your financials.
So would it be fair to say that we have more than 10 times the annual payout or expense, even though it's a long-term liability? We have the 34 million. We only paid out 2.6 million this year. It looks like 2.6 million last year. So we have more than 10 times the amount that we pay out each year.
I think maybe 4 times, right? If you're paying, all things staying consistent, right? Which they don't. But you paid out 2.6 million this year, and you have approximately 11 million in that trust. So if everything were put on pause and you were just making payments, you weren't earning any income, investment income, you would pay out those funds within 4
It's the
years.
10 million, not the 34 million. The 34 million is the liability.
Yes.
The 10 million is what we have. Okay. Thanks for clarifying.
President Inca, may I ask a question?
Sure. I have one more question, Jenny.
Okay, sure.
And I just want to clarify, we don't offer the benefits that keep adding to this liability, right? This is a legacy benefits we provided in the past, or this is still for
This
employees?
this is ongoing where like employees earn 1 year retiree benefits for every 3 years worked. And I think it's different for faculty, but this is liability that current employees are earning for health benefits.
So just health, just for like vision,
Medical.
dental, healthcare.
Just for medical benefits.
Okay. All right. Go ahead, Jenny.
Yeah, I wanted to ask, how is this money invested?
It's through Keenan and through a Futurist Trust that was originated by the board back, I think, in 2006. And it's with Morgan Stanley is the investment advisor, and it's with Benefit Trust. It's with mutual funds, and it's a it's you know, for long-term growth, but it's somewhat conservative as well. I believe it's like 60% fixed investments like bonds, and about 40% in equities.
Okay. Well, because the stock market's obviously done very well this year, but that doesn't necessarily mean it will in the future. I thought districts were prohibited from investing in equities.
Marlene can maybe speak more on that, but it's like our county, you know, advises against it. And for the most part, all of our cash is in the county treasury, which would, but you know, very safe. But for things like this, it's an exception to that rule. I don't know if you want to add, Marlene.
I'm not objecting. I'm just asking a question.
Right. Yes. Generally, district funds are to be maintained in the treasurer's account. Exceptions are donations or uses of district funds for purposes such as this in an irrevocable trust to support OPEB costs. It was established several years ago, as John mentioned, when the then board made a determination that the district had sufficient reserves to be utilized to service it. So this is a district liability, and so district funds can be used to pay it. And so when we had sufficient reserves to dedicate towards this, the board determined that they would establish this fund, which has truly been the correct decision, as you can see by the amount of interest we're gaining that we would have otherwise have missed out on. And in the future, the board can continue to increase its contributions to the irrevocable trust should the board determine we had sufficient additional reserves. Otherwise, that $55,000 annual contribution really represents our attempt to stay on top of future liability while recognizing that we still have about 3 times as much as the fund's value in additional liabilities.
Okay, thank you, Marlene. I'm not objecting. I was just questioning.
Yeah, overall, it is pretty we're risk adverse with the investment, but we do want to have a little bit of risk so that we can make some of those returns. But it is a very, very risk adverse investment.
And I would just add that the district does have an investment policy specifically for these trust funds that they follow. And Marlene had referred to specific contributions, which as you all are well aware of, there was a 30 million contribution that was received at the end of the fiscal year. That is reflected in the financials. And we've talked to John a little bit about that. And that's another, once those funds are invested outside the treasury, an investment policy needs to be written for that because it has a different purpose and a different use and intent. Thanks for your questions regarding that.
So thank you.
Yeah, certainly. So I was going to point out footnote wise, and if I just point out, if I direct myself to a certain footnote and I and I don't cover a footnote you want to talk about, I'm happy to go back and look at that together. But your footnotes to the financial statements give a little bit more insight. Oops, too far. Little bit more insight into the district as well as what makes up those numbers in the financial statements. So I did go too far. There we go. So one footnote I wanted to point out to you is the long-term debt. We did talk about the OPEB a little bit. So all very versed in the liability that's associated with that. So just to point that out, since we were looking at that detailed footnote together, your general obligation bonds, you have 3 different measures. So 3 different general obligation bonds and repayments that are established. So you can see the additions are higher on this side, and that has to account for the refunding. So we have to add it on and as well as take it off. So you have just as respective reductions on the other column there. Another liability that is increasing each year is the net pension liability, and it has to do with your STRS and PERS, as you're aware of, and it's documented in your budget book, just taking into account the increasing rates that are associated with that liability. And at some point, it will level off. I think they have picked a percentage to increase each year, and John was actually asking that question recently, like, hey, when is this going to slow down? And I think we have an answer that's in the near future, but as you can see, it is a substantial liability, as well as with substantial liabilities, you have related footnotes. So if you were to look through the footnotes regarding this liability, it probably covers about 10 pages. I typically make a joke with my team that if we update the long-term debt footnote and the STRS and PERS footnote, like half the report is done because it is such a significant piece of the financial statements. And then also to point out, when we talk about the pension liability, that does also include the CalPERS miscellaneous plan, which is for the auxiliary fund. Let's see. Letters. Here we go. So following the footnote disclosures, and maybe I should stop and ask, did anybody have a footnote that they wanted to look at a little bit more closely, such as we had the discussion on the OPEB? Okay. So just wanting to point out the 3 letters in the back. So your audit report, a community college audit report is actually very complicated. You have 4 different letters. We talked about the opinion letter in the very beginning. And then following all the financial statements, the footnote disclosures, you have another series of 3 letters. So let's look at those 3 letters real quickly. The very first letter has to do with governmental auditing standards. And since the entity receives federal funds, we are required to look at the internal controls over the financial reporting. So that's the purpose of this letter. Also, what's important to point out as we go through these letters is that there's respective finding sections that are associated with it. So as we look at this specific letter, I just want to point out that there were no findings related to the financial statements. The next set of next letter in our set has to do with uniform grant guidance. So this is your federal compliance letter. We do test student financial aid, the HERF funds, as well as the COVID block grant this year. As we talked about the compliance supplement has identified the HERF funds and the COVID block grant you're receiving it from the chancellor's office, but originated from the U.S. Department of Treasury. So the compliance supplement has identified those as high-risk grants, and it makes sense. Those grants were put together fairly quickly, and the rules and regulations related to those grants constantly are changing. There might be a question and answer issued to the community for everyone to follow, and then a month later, a new question and answer will come out clarifying, we've reevaluated, you can apply this to this grant as well. So it's a grant, just to point out, it's a grant that's changing and management is keeping up with those changes. We have no findings related to the federal programs that we've been tested. And actually, I probably should double check. Ricardo, have we received everything that we need to make that statement? We had a few open items that we were waiting for on Friday.
There is a couple open items for HERF that
Okay.
we're waiting to hear back, but I know management's in the process of getting that to us. And I think there was one open item for the COVID block grant as well,
Okay.
but that's in process as well.
Okay, thanks. So I probably want to preface that we just have a few open items. So if any concerns or observations come out of that, we will contact management immediately and make sure that they notify the audit committee and a change in this letter. But we're not foreseeing that at this time. But I don't want to say it's for certain that we have no observations, since we do have a few documents that we need to still need to review. And again, that's just has to do, that's our highlighted section in that letter. We're still working on that. And again, that just has to do with the timing of the compliance supplement and needing a little bit more time, which the Chancellor's office did extend the financial statements to February. And then the last letter has to do with state compliance. So the Chancellor's office does issue what's referred to as the contracted district audit manual. So it does list specific steps that we need to perform, just kind of get them centered in the page where you can, so you can see all the sections that we do audit. And the Chancellor's office, they do make changes to this every year. So we do have some new steps. If you remember last year, we looked at the data control environment for the student center funding formula, and 2 new sections have been added in that regard. So that's an area that Chancellor's office obviously is looking at and making sure controls are in place and that data is correctly being reported. And then another new section has to do with the COVID block grant, which we mentioned. There's a little crossover between that being a hybrid state and federal grant. So we did test both the state and federal piece of those. And those were the letters. Maybe one more page to point out to you before we look at the Proposition 39 report. So before the finding sections, which we clarified, there are no findings this year. There is a summary of auditors' results, and this is required to be in your audit report per uniform grant guidance, but it's a great page to turn to so that you can see all the highlights of the report and see that the opinion is unmodified. There's no internal control weaknesses that have been identified or non-compliance. And then as well as having that same type of summary for the federal awards and just being able to see which major federal programs did we test this year. So any questions on the audit report before we move on to the Proposition 39? Okay. And I'm going to pass it back to Ricky to talk to you about the Prop 39 financial piece. And before I do that real quick, just to point out that there's actually 2 proposition reports. One has to do with the financial piece as well as the performance piece. So Ricky will be talking to you about the financial.
Alrighty. Thanks, Heather. So next we'll be covering the Prop 39 financial report, which is presented with a clean, unmodified opinion, as noted on the second page of the opinion letter here. So the key item we are looking for would be the presented fairly and non-material respect statement. That would be your unmodified opinion there, clean opinion. So this financial report and opinion is for both funds Measure E and Measure LB. And as noted on the emphasis of matter paragraph as well, it discloses that this report covers only these bond construction funds Measure E and Measure LB. Okay. So as noted on the balance sheet here, we can see that for Measure E, there was no bonds that had been issued during the year. However, there is 37 million in available funds for Measure LB. As seen on the next page, income statement, there was 80 million spent on construction projects for Measure LB. Okay, and then moving on to note 3 of the financial report. So this note reflects the bond liability, which is a liability to the district and does not reflect it on the Prop 39 financial report. And on the moving on to the schedule of findings, there were no findings to report as reflected here on the schedule of findings and as communicated in the governance letter as well. Are there any questions on the Prop 39 financial report? Okay, I'll pass it on to Heather to cover the Prop 39 performance report.
Okay, thank you, Ricky. So the Proposition 39 reports, again, has two reports. The report that Ricky had covered has to do everything with financial, where this really has to do with the compliance piece that's required by the voters when they approved for Proposition 39 bonds to be issued. I remember the catchphrase being, it gets its own audit. It might have been worded a little bit differently, but that was the key in getting the voters to buy in on this new type of passing GO bonds. So when we look at the financial piece and we look at the opinion letter, we've been pointing out to you presented fairly in material respects. So since the performance piece is compliance in nature, it has a little bit different verbiage. Basically, it's referring to the testing that we performed, and it indicates that tests indicate that in significant respects, the district has expended the funds properly. With the performance report, couple of paragraphs to point out to you. It gives a little bit of background information. So if somebody's just picking up the report and thinking, what is this about? It gives a nice history about back in November 2000 when these type of bonds were approved, discusses what our objectives are. Really, our objective is to make sure that the funds are spent according to what the voters approved back to when those bond measures were passed. But really what we want to talk about today is what were the results? So let's look at, oops, I went too far. Want to hone in here. So as we looked at the financial piece, the Measure E is kind of in a holding pattern right now. There are bonds that can be issued in the future, but it's a strategic measure not to issue them at this time based on the promise that's been made to the voters of the district. For Measure LB, we do significant testing in which we did test, let's see, there were $80 million in expenditures for the year. So we did test 68 expenditures, which amounted to $44.3 million or 55% of the actual expenditures. So because of the nature of this type of audit, a typical audit, and even with your district financial statements, we are not testing 55%. Our professional standards has a statistical sampling that we follow in selecting our samples, but Proposition 39 is unique in that it has a very high level of percentages that are tested. Also, salaries and benefits. This is another key conversation to point out to when you're looking at Proposition 39. When it was approved, it was very clear that funds could not be spent on administrators' salaries and benefits. So we do review who's being charged to those bonds and making sure that they are working directly with the bond program. Otherwise, they do not belong in that fund, only people working directly. And in conclusion, for the performance audit, no observations to report back to you. When we go through, we take our sample selection. We are looking to make sure that everything is adequately supported. If it requires to go to bid, we're looking at the bidding procedures as well as looking at who's being charged to those funds. A couple of other compliance areas that we look at, we do look at the COC board meetings and look to see what's posted on that committee meeting, as well as having the right representation on your COC board. So everything this year, no issues or findings to report back to the committee. And that concludes our audit presentation. Any questions?
Heather, I guess I have a question for the whole group, for our board members and administrators. In the past, the typical presentation that you do to the full board meeting has been 15 minutes or less, where you go over a briefer explanation of highlights of the audit report. Is that approach still good with everyone? Okay.
Yep, I think that'd be good.
Okay. And of course, it's always open to any questions that the board may have.
And we've had a PowerPoint presentation. Is that still the preference? Okay, we'll get that presentation open or updated.
Yeah, I think the PowerPoint with the finalized attached documents would be helpful. Yeah, we always attach the 3 final versions of the audit report, so we'll have that attached on the board agenda for January. And Heather, if you can, we have, it's next month, but if you can send us that PowerPoint presentation, we'll forward it to Dario, and he'll be able to have it on the screen for the board meeting.
Okay.
Sorry, next month or next week? Is it for December or for January?
January.
Okay.
Right, because we talked with management to make sure if we brought it in December, it would have to be a draft report. So in order for it to be a final report, it was chosen that we would present in January.
Okay.
And will you be in person in January?
We have to do a 30-day notice every 30 days. So
okay, well, keep me notified.
We'll see how Omicron spreads in Long Beach or not before we make our decision.
Sure. Well, we're flexible with whatever happens.
I think it's the 4th Wednesday of January, so it's the end of the month there.
Okay. And I believe I have it on my calendar already. Yeah, just let us know what gets decided. I do have some districts that are going back to in person, so just trying to keep track of everybody and plan accordingly.
Okay.
And you said the 4th Wednesday. Yes, I have it on my calendar.
If I could, I just wanted to thank the auditors. This is a big job every year. And if I could just thank, there's a lot of people at the district involved with this process, the work that's done throughout the year, and then the work that's done through the audit process is very extensive work on top of everybody's daily jobs. But just wanted to point out 3 specific people. First of all, Conrado Durand, our new deputy director, who is the lead on the audit. And this is his first year in that role, and he did a great job. And also wanted to thank Yvonne Gutierrez and Jason Avila in the financial aid audit. Financial aid is a big area with a lot of compliance and a lot of compliance steps. When you add all the HERF funding on top of that, as Heather mentioned and Ricky mentioned, there are still open items. Normally at this point in December, testing is done, and in some cases long done, but there's just a lot more work this year. So as I say, there's a lot of people to thank at the college, but especially those three. Thank you very much.
I agree. We're thankful for those people as well.
And I just want to say thank you to both of you, Heather and Ricardo, for working with me. It's my first time around, so it's you guys were helpful, and yeah, I mean, I'm just providing all the detail, but staff here, they're the ones doing all the work. So
Certainly. Okay, well, our next steps are to finalize the audit. So we talked about those last few items that we're waiting for. We do have a quality review process, which goes to a national team. Somebody not associated with the audit report, as well as our audit work papers, are reviewed for professional standards. So if anything comes as a result out of that review, we do contact management immediately. If it's going to change a presentation in the financials. Every once in a while, they come across and say, how come you don't have this disclosure? And we think, I don't know. Let's put it in there. It needs to be in there. So, but I think your audit report's probably pretty solid. But again, if something changes, we'll notify you immediately regarding that change. We do the auxiliary 990 tax return. So we'll be working with our tax team to get that process started and get that tax return prepared for you. And we'll plan to see you in January.
All right.
Thank you very much.
Thank you. Appreciate it.
Thanks, Heather, and thanks everyone for your time in this meeting. We really appreciate it, and hope everyone has a good day and a good holiday season, and we'll call the meeting adjourned.